You're listening to Create Wealth Through Franchising, and I'm your host, Kim Daly. In my 20 years as a franchise consultant, I've helped hundreds of people achieve their dreams of building and scaling franchise businesses to create wealth. The interview you're about to hear can also be found on my YouTube channel, where I post new franchising content multiple times per week. Please take a moment to subscribe to the podcast and to my YouTube channel at kimdaly.tv. Now, enjoy the show. Jim, thank you so much for joining me today. I'm very excited to interview you and just sort of teach, my YouTube followers a little bit more about your specialty, infinite banking. One thing that I've learned in the last couple of years that I've had the pleasure to know you and become mentored by you and become friends with you is that truly wealthy people are not passive about investing. So they may not be exchanging their time for money, but they are investing time in finding good investments, right? That allow them to build cash flow that they own and control, build equity that they can do something with, and provide tax shelters, right? Going to Robert Kiyosaki's book, Rich Dad, Poor Dad, or the Cash Flow Quadrant. It's a great book, right, that emphasizes this conversation.
Absolutely. Absolutely.
You are a leading authority and expert on infinite banking, which I think many people are like, what is that? I certainly didn't know what it was prior to meeting you, prior to being a guest on your podcast. So can you set up a little bit for the audience about what infinite banking is and how it would benefit somebody?
Yeah, so infinite banking in a nutshell is building a banking system that you control, not the bank, so you make the profits from the banking function in your life, not the commercial bank. The reason that we need that is our need for finance is much greater than our need for investment. And it's old school to give somebody your money, have them go invest it in Wall Street and be a middle person and charge you a fee and hold your hand and be your buddy, and you hope that they make you money, right? You have an expertise. Every single person out there that has an expertise or can develop one, and that expertise in that business needs banking. We all need banking. It's like the grocery store, right? You have to go to a grocery store. So the banking is the same way. This is an alternative bank.
And how is that bank funded?
So you fund it a number of different ways. It could be reoccurring revenue that you have in your business. It could be reoccurring revenue that you have personally. It could be chunks of money that aren't efficiently growing and are being utilized. Again, if you've bought into the idea that I should let my money sit and be stagnant, dying for 20, 30, 40 years before I use it, then that money can be used in a more effective way. That money can be used to go buy franchises, to go buy real estate, to go buy other things, right? And make you money now, build your wealth now, not hope that it grows over the next 20, 30, 40 years. Because things that don't move, motion is a law of God, right? If air doesn't flow in and out of our bodies, we die. If water doesn't flow, it dies. And if money doesn't flow, it dies.
That's a great point. So it's all about expansion. Okay, so if someone comes to you and they're like, okay, I'm curious about this idea of an infinite banking policy, is there a minimum amount of money that somebody would need to put into this?
There's not really a minimum amount of money. The more money that you can put into a bank, the more that you can profit from that bank. So we have people that start with a small amount, right? But it's the mind shift of seeing why you need to be your own banker. And I love working with young people that haven't developed these paradigms from all the noise out there and the herd about how you're supposed to build wealth. And they've never been damaged, right? They've not been in the train wreck. They're fresh, and they come to these ideas, and they're going to grow throughout their lifetime. And we have advisors with our firm that are in their early 20s as well, that are like perfect matches for those people that will grow with them. And so, everybody should take over the banking function in their lives, regardless of how much money they have.
So I'm a customer, right? I got to know you and I thought, wow, this really makes a lot of sense. I mean, I want to build passive income so Kim doesn't have to, show up to her desk every day in order to earn money. So you put a certain amount of money in, and the idea is that that money that I'm putting in then creates some cash value that then I can use to then go invest in a business. Or, for example, when my son, who's now 13, was born, I took out a policy like this, and with the intent of funding it until he was 18, and it will have about $300,000 in cash value that now we can use to fund his college education. So boom, that was checked off when he was a baby. Just by me putting in a small amount of money consistently, it's growing, and that cash value is growing for me. Is that a great example, or is that a good example of the process?
So what he's going to have is he's going to have this money pool of $300,000, right? That because he has this, he can collateralize it and go use somebody else's money, i.e. the insurance company's money, to go make money. So his money stays in this tax shelter, growing every single day, guaranteed. Huh?
I said,
your
my
money. I'm sorry, your money. That's right. Your money. That's your $300,000. I get it. Because here's the thing. I would tell you, I'm on my third wave of children. So that's just the way God threw it at me. But, a little curveball with a slider attached. But is you loan him the money to go to college. Right? Loan him the money. This is a pool of money that's available to you, but only for loan. You have to pay it back, and you have to be honest banker, which means you got to pay yourself interest, or i.e. he's got to pay you interest. So, but your money stays in this tax shelter, growing every single day, not taxed, right? You get to go use the insurance company's money. You loan it to him for college. You loan it to him to start his own franchise or his own business. You loan it to him to buy some real estate, whether it's his house or rental house, whatever it is. You continually loan it to him, and all the money that he's paying back to you builds that money pool that someday he's going to inherit, right? But he's also going to start his own, because the profits of those assets need to go somewhere. And if you flow them back into somebody else's bank, then you're not getting the point that you want to profit from banking, not somebody else. But think about this: if I have $300,000 in the policy, and I go take that money and I leverage the bank's money too, and I go buy, let's say I buy $1.5 million of real estate. Okay, and let's say that I can get, this is what my goal is, 25% cash on cash. So I'm putting in $3,000 or $300,000. I want $75,000 a year cash flow from that property. Okay, now that's pretty good, but I'm leveraging the bank's money, so I'm using leverage, right? And so that real estate then is going to flow back to me $75,000 forever, right? And when the government keeps on printing money, my asset's going to go up in value because I'm going to raise the rents, right? So I have a fighting chance instead of the dollars that are in our pocket eroding every day. But now think about that. I take that $300,000, and maybe I don't even need all $300,000, but maybe I can buy a whole territory of franchises that are going to probably, I'm going to guess, because I own a franchise, as you already know, is going to make me more than 25% cash on cash, my investment. It's going to be better than the real estate, right? And I can show you my numbers. I know my projections show that it's going to be a lot better than 25% cash on cash. So then I have all these businesses that I have from that $300,000. It flows back into the insurance contract until I do what? Until I have another opportunity. So as long as I can find these opportunities, as long as I can expand, and so like in my franchise, I would buy somebody else's territory because not everybody's going to succeed. I want them to know I'm first in line if somebody wants to sell, right? Because I know I'm going to figure out how to do this better than anybody else.
I love it. And so for the rookie here, the rookie listener, the difference is that if you were to put that $300,000 or that money that I put in, 14 years ago for Luke's college into the stock market over the course of that, 18 years that it was building, would it build to 300,000? And then when I take it out, let's say that it did, would it even, Jim? I don't know. When I take it out, the idea is that money is no longer growing for me. Now I'm spending it versus in this infinite banking policy, I'm not touching the principal that I've put in over 18 years. I'm using the cash value that comes from the policy. So my initial investment is still there to keep growing. And that's how you get that velocity. That's how you get that, as you said in the beginning, everything is continuing to grow and to expand.
Absolutely. So in Wall Street, you could have zero. You could have put all that money in there and had zero, right? Sure. If there's a lot of there's a lot of threats to your Wall Street money. Bad advice, bad performance, bad market, none of it under your control.
Right.
If you want to learn how to, I'm just using two examples, franchises and real estate. You can go read books on how to run a business the right way. You can go hire people that are going to help you run that business the right way. Most of these franchises, they have systems, right? You get a coach, right? So now, you don't get that with Wall Street. You get somebody's opinion, and they're being fed their opinion by who? The mutual fund companies. So, wait a minute. That's like going to the car dealership and saying, hey, how do you think I should buy this car? Well, I think you should buy it the most expensive way there is. Okay, sounds good. I mean, you would never do that. So, life is a participatory sport. If you want to learn about franchises, find the right consultant, i.e. Kim, and learn. If you want to find out you want to diversify and, think, Kim's not, that's the thing that I love about what you do. And this, by the way, in infinite banking, this is the part that some people don't know what they would do with the money. Okay. This is where somebody like Kim comes in, because Kim's going to tell you, hey, here are your options. Here's what you can do with the money based on my experience and my system. Here's where I think you would succeed. And this is a good fit for you. Now, you don't get that in Wall Street. I think the good fit is if you go to Edward Jones or something like that, it's all American funds. You don't need to pay an Edward Jones guy a 1% fee. You could call 1-800 American Funds and get that same portfolio. So this is different. But what it does is, in The Richest Man in Babylon, one of the tenets that he has is invest in what you know. Okay, if you're a young person or you haven't built an expertise, then what are you interested in? Hey, I'm interested in fitness. Okay, are there fitness opportunities in franchise? Hey, I'm interested in recession-proof businesses. Whatever it is, then study them.
And if
right?
you come to a franchise, Jim, you don't even have to know. You don't even have to have the expertise because there's no prior experience necessary in order to be successful, right? The franchisor can teach you. That's the whole value proposition of coming to someone like me without an idea, is that we don't need an idea. We just need some basic skills and a vision of your life, and then I can find the ideas. That's why we're a match made in heaven, Jim.
I know. No, I agree. Because that, you're exactly right. This is, the franchise that you helped me and my business partner get started in. I've noticed they have a system for everything, right? Now, I have systems that I use in my other companies, but I'm not going to argue with their system, right? I mean, they've already got it down. If I'm brand new, I've never run a business before, accounting, got it. Lending, got it. I mean, everything that you would need to run a business. And and you're right, they tell you how to do it. And then you have your coach that's going to walk you through and say, what I'm going to do is, as soon as that thing starts to cash flow, I'm going to say, Kim, what else do we have? Because, all right, let's reinvest that. Let's grow the empire.
I love it. I love it, Jim. I think this is a pretty basic understanding. But if people want to take this conversation further to really, more how they could leverage their own money through infinite banking, how would somebody reach you?
Just go to createtailwind.com and check out our resources on there. There's a lot of free stuff on there that will help you get an idea of what infinite banking is. And then when you're ready, for everybody that mentions Kim Daly, then I'll send you as my gift to you, a free copy of Becoming Your Own Banker, which is a book that my mentor, that Nelson Nash wrote 20 years ago. It's the best book on infinite banking. I'll send it to you absolutely free, no obligation. And or you can email me, jimoliver@createtailwind.com.
That's awesome. Jim, my mentor, my friend, thank you so much for sharing your expertise. I hope this was interesting to our viewers, and look forward to more of this in the future.
Absolutely. Thank you, Kim.
Thank you.
Thanks for all you do.
If you found this inspiring, please contact me at inquire@kimdaly.tv. My consulting services are totally free to you. Again, that email is inquire@kimdaly.tv. I can't wait to hear from you.